Welcome to The Explainer. Today, we're looking at a massive structural paradigm shift happening literally right under our noses. For centuries, the absolute foundation of our financial lives has been completely unquestioned. You just get a bank account, right? But according to the leading architects of the new digital economy, the traditional financial system is facing a profound disruption. Today, we're focusing squarely on one incredibly provocative idea: why bank accounts, as we know them, face total extinction. Okay, let's dive into this. Our sources make a really bold claim right out of the gate. The bank account is dead. And this isn't just hyperbole from some random internet forum. It's a serious thesis being actively prosecuted by major financial institutions and technologists all around the world. The core argument here is that the traditional bank account, which is essentially just a special purpose record maintained by a specific institution, is fundamentally obsolete. It's actively being replaced by the on-chain revolution. So I want to pose this direct question to you. If the bank account goes extinct, where does your money actually live? For your entire life, your wealth has likely been defined by a digital entry in a private database owned by a bank. If that entire system vanishes, what happens to your salary, your savings, your everyday purchasing power? Setting the stakes here is absolutely crucial because we're talking about how your personal wealth will be stored and moved in the very near future. Part 1. The who owns what machine. To figure out the answer to that question, we first need to look at the foundational technology driving this whole shift. We're going to step right past the confusing crypto jargon for a second and just look at what the underlying tech actually does. Human society is built on a very deep, almost primal psychological concept: property. From the days of prehistory, we established rules basically saying, hey, this rock is mine, don't touch it. For centuries, we relied on complex laws and eventually centralized banks to keep track of these rules. But today, a blockchain is simply a shared ledger, acting as a general purpose who owns what machine. Instead of relying on a bank's private, closed-off server, humanity now has a universal, programmable machine for tracking who owns what natively, right on the internet. And this brilliantly illustrates the shift. Think about the history of technology. We used to have special purpose devices everywhere. You had an alarm clock by your bed, a pocket calculator on your desk, maybe a Walkman for your music. Today, your smartphone has absorbed literally all of them because it's a general purpose technology. Our sources point out that exactly the same thing is happening to money. General purpose blockchains are poised to completely absorb and subsume special purpose bank accounts. Because when you really strip it down, a bank account is just a special purpose record that an institution owes you money. That's it. It's just a ledger entry. Yet, traditional finance, or TradFi, relies on massive physical infrastructure, rigid gatekeepers, credit checks, and literal mountains of paperwork just to prove you are who you say you are, all to maintain this one super narrow record. It's an incredibly heavy, high-friction system designed for a single specific task. Part 2, Stablecoins, the digital IOUs. So how does this abstract who owns what machine actually become usable for daily commerce? How do we replace the bank account without forcing everyone to use highly volatile speculative tokens? Well, the answer is the stablecoin. To understand it, we just need to look at the history of the IOU. As our sources explain, a stablecoin is really just an ancient instrument wearing new digital clothes. If I write IOU $10 on a clay tablet in antiquity, or on a paper check in the 19th century, in a bank database in the 20th century, or as a blockchain token today, the legal promise is exactly the same. The token is just the newest form factor for fiat currency. To put that into perspective and see why this is replacing traditional accounts, let's look at a real-world example from our sources. Consider a major US e-commerce giant with $350 billion in sales. A huge majority of their goods are made overseas, say in Vietnam. Traditionally, sending that money across borders is an absolute headache. It involves high hidden fees, bouncing through multiple correspondent banks, and waiting days for the funds to actually clear, especially if you happen to hit a weekend. But if that marketplace pays its suppliers directly in dollar-pegged stablecoins, the capital moves instantly, 24/7, the supplier gets hard currency immediately, and the marketplace operates with unprecedented efficiency. This is the true innovation right here. Stablecoins merge the speed and borderless nature of the blockchain with the stability of fiat currency. It's the happy middle ground we've been looking for. It allows capital to move at internet speed without the extreme volatility that plagued early cryptocurrencies. You get the programmable power of a global network, but a dollar still equals a dollar. Part 3, the Wild West of DeFi. Now, what's really interesting about this slide is the stark contrast. we have to impartially examine the severe reality checks that come with this technology because it's definitely not all seamless efficiency. Let's pivot and look at the entirely unregulated, open networks operating today, the world of decentralized finance, or DeFi. On one side, traditional finance runs on business hours. Transactions are often reversible, there's customer support if you mess up, but it's heavily gatekept. On the other side, DeFi runs 24/7, 365 days a year. It offers open access to literally anyone with an internet connection. But it is automated, unbiased, and entirely unforgiving. There is absolutely no forgot password button in the DeFi column. The dangers of this system are severe and very real. If you lose your private cryptographic keys, your funds are irretrievably gone forever. There is no central bank or deposit insurance to bail you out. The space is plagued by rug pulls, where anonymous developers just vanish with investor funds. And because the system relies entirely on code rather than human judgment, smart contract bugs can lead to total financial ruin in the blink of an eye. Take this specific example cited in our sources. The Aztec Connect protocol was recently hacked, resulting in an attacker draining $2.2 million straight from the system. When machines and code run the show, any vulnerability can and will be exploited by hackers. It's a digital Wild West out there, and users bear 100% of the risk. Part 4. The future of your wallet. So we have the incredible, world-eating efficiency of general-purpose blockchains on one hand, and the terrifying, unforgiving risks of decentralized finance on the other. How does this all resolve? Well, despite the claims that the bank account is dead, the physical institutions, the banks themselves, aren't likely to just disappear. They're going to adapt. In fact, our sources suggest that stablecoins are actually a massive gift to banks. The likely reality is that banks will simply offer you digital wallets. When foreign stablecoins flow into your local economy, the banks will catch those tokens in their regulated wallets, convert them to local fiat, and earn massive foreign exchange fees just like they did with traveler's checks back in the day. So the crucial point is that the future isn't some total anarchist takeover. It's something called Reg DeFi, or regulated DeFi. It's a blend. The underlying blockchain provides the 24/7 speed, the global access, and the automated clearing. But TradFi provides the regulatory guardrails, things like know your customer checks to verify identities, anti-money laundering compliance, and the security nets that everyday consumers desperately need. The classic bank account simply evolves into a regulated digital wallet. Which leaves us with this final, kind of heavy thought. As the traditional gatekeepers are replaced by math and code, the responsibility of wealth management shifts directly from the institution to you. In the on-chain revolution, the greatest risk isn't a bank failing. It's the limit of your own understanding. As your traditional bank account faces extinction, you are literally going to be handed the cryptographic keys to your wealth. So the question you really need to ask yourself is, are you ready to be your own bank? Thank you so much for joining me for this explainer. I hope this has provided you with a clear, structured understanding of exactly where the future of money is heading.